Honestly, what a crazy bullish day today, man. Look at that's why like it. What a crazy bullish day, dude. It's so bullish right now. What a shocking day. Honestly, what a crazy bull. Um, like look at how like the market is just flying. You know. And again, I think I'm in. Yeah. Like I sold Meta half of my Meta position and then I made it right back, which is nice. I'm gonna go ahead and take some of this off just because like I'm already up so much. I could probably sit on the rest. All right, I just took half of that. Let's see what's up, Santiago, Ricky. Let me get some music going here, chat. Big earnings day. We got Google, Microsoft earnings in a couple in like an hour. We're gonna cover all of them. So what's nice about them is that like we're gonna cover Google and Microsoft. Um, so feeling a little bit better today. I'm guessing by tomorrow I'm gonna be good. I'm gonna be feeling fine. Netflix is up too. And like look at Apple. Here's the Q on the right. Q almost green after a red morning. Nvidia at the 830s, helping the market for sure. What's up, D, Santiago, Ricky, Biggie? So we got our poll live. It's going to be Q1 earnings today. Let me get all this live here. Hold up. Fix this. It's Q1. Get this rolling live. So again, Google is expecting 149 EPS. On 65.93 billion in revenue. It depends on which one you're looking at. We could be looking at GOOG. I wonder if I should schedule this as Google with. Alright, so yeah, so Google is expecting 149 EPS on 78.61 billion. In revenue. Microsoft is expecting 281 EPS on on 60.7 in revenue. Both results are going to be streamed at the closing bell, plus the full earnings calls. Subscribe. Yep, there we go. So we'll give you guys a full list here. Again, look at NVIDIA, Apple, Q. Here's Google. So I know I didn't even pull up Google. So here's Google. We're going to look at GOOGL because these are the class. Now these are the Class A shares. These are the better shares. And then we're also going to stream and then look at NVIDIA here today. Again, we got Microsoft earnings. Microsoft opened really red and then ripped all the way back up to almost 400s. Yes, Harold, I did. I think I did. I have to go back and check. I'm currently up right now. My average price on Meta is 412.50s. 412.50s. And so I ended up buying the dip afterwards. It's something that I do really regularly from earnings reports. Is I'll like buy the dip and attack like the big pullback from it, if that makes sense, right? So I'll buy the dip. I'll attack like the large pullback that we get from it, you know. So yeah, I'm up right now. I don't know if I made net profit. I don't have to look. But I think I did. Look at Netflix. Yeah, I usually like buying pullbacks after earnings. They can be a really powerful thing. A lot of the time, like earnings come with a lot of emotion, right? So you'll have these big pullbacks, these big dips, these big bounces. And I like taking the other side of the trade most of the time. So like an example of this is like Meta dipped really big on pretty good earnings. They beat EPS, beat revenue, good guidance, and they dipped a lot. They dropped like 20%. And so I ended up buying the dip and riding it back. You know, so again, I ended up buying the dip and riding it back. Average price is 412. So we did pretty well there, but yeah. So we're going to do a poll here. We also have Microsoft earnings today. Pretty big day for all of these. Hmm. All right. What's up, bro? Just short of the TQ. My portfolio went from 1,000 down in the green. What a crazy day. Yeah, man. I mean, listen, bro. Like one of the biggest like things that you learn here, watching my own YouTube stream. You know, we get thousands of people that watch my channel. One of the biggest things that I notice is that rookie traders predict market crashes every major catalyst. It's a market crash, bruh. Like, come on now, guys. Y'all chill out. Like, every day I hear it in the morning. And it very rarely is, you know? Like, the SPY moves, it's just the nature of the game. I think the more you're around it, the more resilient you are to it. I think the less you're around markets, the less you understand, and the more you want to see action and crashes, you know? I don't know. Yeah, if they're going to want to collect taxes on unrealized gains, we got to have refunds on unrealized losses. This is something that Anthony Pompliano just said, and I absolutely agree with him. I think if we're going to do it. Here's Microsoft. Let's see about $400. You can see that $400 level. Here's Google. We got this double top on Google up here. Q just broke highs again at 425, heading into the closing bell. Is Tesla pumping, dude? I'm in Tesla. I haven't even looked at it. Ooh, it is. Hey, you love to see it. You know, there's always moments when I take positions, even if they're not big positions, that I get kind of nervous about the positions I take, right? Like an example of this is I bought Tesla. I added into Tesla on the dip. I added into Meta on the dip. And there's always moments where I add to these positions and I get really nervous. You know, like I got nervous about Meta. I got nervous about Tesla. I got nervous about a lot of these tech stocks I buy the dip in. And, you know, when you look at them afterwards, they're just easy buys, man. Most of these are easy buys. I'm not telling you what to do. I have no idea what you should do. Not an investment professional, of course. Don't copy me. But, you know, some of these are just really obvious buys. You know, like Meta dropping 20% in about 30 minutes is an easy buy, to be honest. Like, the probabilities there of this thing bouncing higher after dropping 20% in 30 minutes is super high. Now, sure, like you're going to get some really unlucky situations sometimes when you take positions like this when it keeps on dumping, but I don't think they cancel out the justification of it. You know what I mean? Like I still think it's a very profitable strategy if you use it right. Like the really hard part is just learning to ignore the bearish traders that are going to tell you the market's going to crash every major catalyst. And then when they don't, they cry manipulation or whatever it is. That's the real tough part because they've been wrong. Like they've been doing this for years. And it's, to be fair, I think it's probably different people. I think they're just kind of getting wrapped up in bearish sentiment, which is really heavy sometimes. Tesla about to break 170s. Yeah, I don't know how far. I don't know how far Tesla's going to go up. I don't know how far it's going to go down. I don't know anything. These are mostly short-term trades, to be fair. Now, I can hold them long-term, and they'll probably work out for me. But most of these are short-term. But Tesla, popping up right now. You know, what made me really start trading this strategy was Meta. So, like, again, if you look at Meta's chart, we'll put it on the right side. If you look at Meta's chart, okay, I was a bearish trader on Meta all the way back here in 2022. In 2022, Meta had dropped from 380 all the way down to under $100 a share, like legit under $100 a share. And I was bearish. I was like, oh, Meta's done. You know, Meta's done. Never took the trade, never bought it, even though it was super cheap. Meta owns Instagram, like they own Facebook, they own WhatsApp. Like, even if you argue future failures of those companies, it's still worth obviously over $100 a share. And so Meta dipped all the way down to these levels way back here, and then pulled a complete 180, went all the way back up to, again, what it is now, which is 450s. So I think you realize, like, you make big moves as much as you might hate individual companies. And I think a lot of people dislike different companies. Tesla just broke 170s. I think there's a huge edge in looking for big emotional overreactions in earnings. Big emotional overreactions. You know, you saw it on Netflix a few years ago as well. Netflix had good numbers and dropped like 30%. I bought that a few years ago too. Worked really well. And we'll see if Meta can break over 450. Now remember, we still have Microsoft, Google earnings. These are big, and so these could certainly negatively impact markets, chat, so just be careful. Gold at 23.40. So gold's still pretty green on the day. All right, so again, we asked people, are they bullish or bearish? 55% are bullish on Google, 44% are bearish. Meta up to 444 is testing highs of the day again. See if it continues on forward, of course. I'm seeing this meme. It says, in honor of NFL draft, may we never forget the night Russell Wilson's ex-wife thought she was set for life on draft day. Funny. All right, chat. Look at Meta rejecting right at the top. All right, guys. We're gonna have to look at Google again. Netflix still breaking highs though. Microsoft earnings predictions. I don't know. Semiconductors are hot today. Yeah, Nvidia all the way back up to 830s right now. Gold at 2340s. Yeah, I'm ready. Chat. It'll be fun. It'll be a fun day. It's a big tech day, you know. So again, what we're gonna do is we're gonna cover Microsoft and Google earnings when they go live after the closing bell at 2 p.m. We are then going to pivot to cover Microsoft, Intel, Google, Snapchat earnings at the closing bell. Big tech earnings drop. Then we're going to cover Google's earnings call, and then Microsoft's earnings calls at 5:30. So we're going to cover all of them, to be honest. I'm excited. Top 3 YouTuber. Intel moving up. Yeah, Intel drops earnings as well. Intel expecting 11-cent profit on 12.77. I'm in Intel as well, so I'm actually holding a lot of these companies. I'm holding Google. I'm holding Intel. Yeah, so we'll see what happens. I'm holding Meta. Yeah, I'm ready, chat. What do you guys think? Give me your expectations. Let me look at our poll numbers. We do have a poll going on right now. Microsoft earnings are going to be at 5. Microsoft earnings are released at 4:05 p.m. So Microsoft earnings are going to be coming out in about, here, let me get a timer. I forgot the time. Microsoft earnings are coming out about 35 minutes. All of them are mostly dropping in about 30 minutes, though. So we got about 30 minutes left. We're going to call it 28 and a half, just to be safe, though. But yeah, most of these earnings are coming out in about 28 and a half minutes. And mostly everything's green since the opening bell. A lot of stuff is red on the day still, but green since the opening bell. Like Meta's still technically red, not on the day overall, but definitely since yesterday's close, Meta's red in their earnings report. Microsoft kind of the same thing. It's green since the opening bell, but red on the day as a whole as well. Netflix very green on the day though, so Netflix is very green. Tesla very strong today also. Tesla's been flying up. Look at Tesla here. So Tesla hit 170s today. So look at that. Very strong moves. Just a lot of big. We got Snapchat, Google, Intel, Microsoft, Roku, Western Digital, T-Mobile, Teladoc, Gilead, Skechers, SkyWest. So many earnings are dropping at 4 p.m. today. So be ready. We'll cover all of them, to be honest. Goats are like spiders. All right, chat. Meta at 440s. You green on Meta? Yes, currently, yes. So far. Caterpillar, good entry level right now, or still some potential to go further down. I don't know. I'm not really a big Caterpillar investor. It's down a lot. Like a lot. But I think they're a healthy company, in all honesty. But they're down a lot. Let me see what the PE ratio of Caterpillar is. I mean, it kind of looks like almost all the other stocks right now. Let me look at... All right, so yeah, so Caterpillar reported better than expected EPS, missed revenue though. Their PE ratio currently sits around 18, so very cheap. Do they pay divvies? It does, 1.53%, $1.30 a share. Not bad. All right, chat. Again, Meta still down, but up to 442s, 443s. Netflix up there at 560s. Still making moves. Bro, how much is one of these little vessel trailers, dude? I want one. That shit looks nice. See, look, so here's the only problem with my code. You see how this potential reversal signal just showed up? Right, and then it freaking disappears. When's it showing back up? It's signaling a bullish reversal, right? But I don't know if it's gonna work. Y'all saw that? It just kind of disappeared. And so, like, I'm not gonna give you guys the conditions for the code, but still, you know, it's gotta do better than that. I asked it not to repaint earlier, and it still did it. Let me go back to OpenAI and have it fix said code. All right, guys. Hey, Tesla at 170s again. Let's take a look at Google EPS graph. Let's take a look at this. Let's see what their shares have been looking like. All right, so here's the EPS, the earnings per share for Google. Beautiful chart. People can say whatever they want about Google. Wildly profitable company. Wildly profitable company. Again, this time they're expecting a little decrease from the last time. This one was at 183. They're expecting 149. So they're expecting right around here. You know, they're expecting right around here. You know, so a slight decrease, but still very good graph. Very good graph. Let's take a look at their revenue here. All right, so look at their revenue. Really nice. Really nice. What? Alright, so look at this revenue graph. Again, 86 billion is what they showed last time. They're expecting 78 billion last time. So they're expecting a slight decrease month to month here. Or quarter to quarter, that is. But still very strong revenue graph, of course. Nothing's going to go straight up. That's not a feasible. Which side do you use when you look quickly, like PE or dividends? I use a couple different sites. Anyways, there's a huge gap to sell. And chat, we got about 300 people here already. Earnings drop in about 20 minutes. So. All right, chat. We do have a little dip in Microsoft down to 398. Is it time to buy this dip? I don't know, man. All right, down to 398s. Google dipping down to 155s. Tesla still dipping down to 169. Should I put up microchips? Yeah, I guess that's a good thing. $18 minutes, yeah. Yeah, I don't know if anybody else is having trouble with Open AI right now, but still got a little bit of time here, chat. So we did get a bounce up on Microsoft. Let's take a look at Microsoft's EPS graph and stuff like that. So Microsoft has, you know, they're the owners of OpenAI, and the majority owners now of OpenAI. And so here's their EPS graph. Microsoft's EPS graph since the AI boom, you know, they're expecting 281. So everybody's really in tech expecting a slight decrease in their earnings. You know, we saw it with Tesla, we saw it with Amazon, we saw it with Microsoft, or we saw it with Apple. I'm sorry, we saw it with Microsoft, we saw it with Google, we saw it with Tesla, we saw it with Meta yesterday. And so most people were expecting decreases in their earnings quarter to quarter, and that includes Microsoft here. Let's take a look at Microsoft's revenue. Yeah, Microsoft's still expecting pretty good revenue at 60.77 billion, but they are, you know, they're still doing, this will be their second largest revenue quarter ever if they come in as expected here, chat, if they come in as expected. So we'll see. Again, we'll see. It'll be interesting to watch. Bullish Microsoft, neutral Google. Tesla slaying bears. Fake out. Hi, Mr. Beginner Trader. Hey, what's up, man? Pump it up. Yes, sir. Which call are you going to be covering? Both. What time is Microsoft and Google? So they both release at the closing bell. We're going to be streaming both earnings calls as well. Google's earnings call is right at 4:30, so 30 minutes after the close in like 40 minutes or so. We're going to stream that one. And then Microsoft's earnings calls at 5:30. We're going to stream that one as well. So we'll cover both of them, really, in all of this, really. So, yeah. I'm definitely feeling better today. I'm feeling much better. You know, I need to tell them about this code that I'm working on though. Let's see, edit source. Have GPT fix this. I don't know if my computer is lagging or what it is, but let me exit out of some shares. All right, so we saw Microsoft's earnings. Yeah, well, that's Central Time. So we're talking about Eastern Time. It's 2:40 right now. The closing bell's at 3 p.m. Central Time. 4 p.m. Eastern is what we're talking about. Meta pulled down yesterday was freak nature. Yeah. That's correct, Bob. Yes, 5:30 Eastern. Google's 4:30. If we get a pump in Google, the daily candle will engulf bearish move more likely. I don't know. Meta bouncing again. Look at the 200 EMA bounce on Meta. Very strong bounce spot here. Look at the 200 EMA level right here. Beautiful bounce spot right around 440s. Yeah, Tesla all the way up to 170s. We're in Tesla right now. We are profiting from that so far, at least. We got 10 minutes plus until the closing bell chat, so we'll see how this goes. Is ChatGPT down right now? Yes. So ChatGPT is down right now. Interesting. 5,000 reports of it being down right now. I wonder what that looks like for Google. Or not for Google, for Microsoft earnings. ChatGPT is down. Interesting. I'm long Tesla. I don't short blue chip stocks like that. I almost never do. All right, guys. 61% are bullish on votes. 38% are bearish. We also did a Twitter poll here. Got a decent amount of votes already. 61% are bullish. 40% are bearish. Very similar to my YouTube votes here, to be honest. 38 bear, 62 bull. On Twitter, we got 62 bull, 61 bull, 39 bear. So almost exactly the same. Man, Tokyo is the most populated city in the world, and it looks like it too, man. Tokyo is really cool, though. I've always liked that. I've always wanted to visit there, but... All right, chat. We got 8 minutes. 8 minutes until the closing bell. At the closing bell specifically, guys, we have Microsoft, Google, Snapchat, Intel, Roku, Western Digital, T-Mobile, Teladoc, all at the closing bell today. One of the bigger days for earnings, to be honest. I would argue bigger than yesterday, which was just Meta earnings. Today we got all the big boys coming out. I have no doubt that Microsoft will crush the expectation, but I'm afraid that the guidance will focus more on cost of AI rather than rev. All right. GPT looks down for me still. Are there any custom GPTs on the OpenAI website for programming? I'm sure there is, right? There's got to be. Again, Tesla's still at 170s. We got 6.5 minutes until Big earnings drop, chat. Be ready. What was the bad Google news, Vane? Puts on Microsoft and calls on Google. Well, Google's up a lot. It looks really solid, but it was down already earlier this. Google was down this morning. It's rebounded back though. It's still red on the day overall. Like Google closed yesterday at around 160s. It's at 157, so it's down. It's down since yesterday's close. But since the opening bell, it's rebounded about, I would say, a little bit over 50% of the gap down. Yeah, I mean, there might have been some, like, Meta was down a lot. So Meta gap down. And so that could be what caused Google to drop with it, you know. But so the FCC approves T-Mobile's $1.35 billion purchase of Mint Mobile. So T-Mobile just purchased Mint. All right, so the NBA is in talks for a series of media deals with Amazon and Google vying for new streaming packages in NBC Universal, Comcast trying to grab one of the main TVDs held by ESPN and TNT, according to Wall Street Journal sources. Where's Disney shares at, man? Disney's still at 112s. Disney gapped down a lot with some of the other companies too. Interesting. All right, chat. Hey, we got 5 minutes. Earnings drop in about 3.5 minutes, 4 minutes. Again, make sure you hit the live button next to the play button. Make sure you're fully caught up on stream, chat. We appreciate it. I'm in, Baba. Is Baba up? Oh, hey, it is. I'm green on it. Nice. Okay. All right, chat. 3.5 minutes. Okay, yeah, there we go. So Chat GPT is better. It's back. They don't have any code preset GPTs though, unfortunately. All right, guys, 3 minutes. All right, chat, we got about 1.5 minutes. Give me your last minute predictions for Google, Intel, Microsoft. All right, chat, 1.5 minutes here. 1.5 minutes. Be ready. There's Baba. Rip it up. Looks good. No, I'm in shares, MB. Yeah, I'm going to be recording Roku, Snapchat, Intel, Microsoft, Google, Western Digital, T-Mobile. I'm gonna cover all the major earnings today, but we're gonna stream Google and Microsoft earnings call. So we're gonna cover all the big ones, but we're gonna stream the biggest two, which is Google and Microsoft. But yeah, we're gonna cover all of them. I'm in Snapchat, I'm in Intel, I'm in Google. You know, I'm in a lot of these. So all right, chat, 30 seconds here. Hit the live button next to the play button. Also, we're going to put it in sub-only mode. Hit the subscribe button, guys. Listen, we need like 300 subs or something to break 135,000 subscribers. And so do it now. We got 20 seconds here, chat, 20 seconds. We need like 300 subs. Do it now. You know you want to. All right, here we go. All right, we got Google, Microsoft. We're going to put Intel up here. Maybe Snapchat. And here's the closing bell. All right, let's watch. Google down to 156. Microsoft at 399s. Intel and Google are the two that are scheduled to drop right at the closing bell. The others are scheduled for 405. Nothing yet. Silence in the stock streets right now. Waiting. You'll notice the volatility when they're here. Google did retrace all the way to 156. Look at Microsoft. Microsoft looks like they're out. Up to 408. Microsoft all the way up to 410s right now, chat. 410s. 412s for Microsoft. 415s. Microsoft reports 294 versus 282, revenue of 61.9 versus 60.6. So Microsoft reported quarter three. Again, if you haven't already subscribed, we cover this fast. We'll put this number up. Again, Intel down. The 33s for Intel. And now it's kind of retracing back up. Microsoft just hit 420s right now. Google's still not out with theirs yet, chat. We're trying to cover these as we get them. But Microsoft 294 versus 282, revenue of 61.86. Here, we'll put a better list up. There you go. Intel's kind of flat on the day. We're still waiting on Google, which hasn't reported, but Microsoft reporting good numbers here, ripping up here. Intel is out. They posted a 9-cent loss and they expected a 14-cent profit. Revenue of 12.7. They expected 12.78. So they missed on both fronts for Intel. We're going to put both of these up on chat. We're still waiting for Google. Google looks like it's out. Wow. Google up to 160s right now for Google, chat. 160s for Google. 163s for Google. They're out. And they are flying up. Tech is doing really, really well today, except for Intel. Google posted still gotta find Google. Hold on. All right, we're gonna cover all the. Wow, look at Google here, chat. Google just hit 170s. 171s for Google. Flying up right now. Double beat for both of them, or I think. All right, so Google posted revenue of 80.54 billion. They expected 79.4 billion. EPS was 189. They expected 153. Google absolutely killed it. So they did way better than expected. Way better than expected for Google. Beautiful here. Again, we're going to put this number up on screen as well. Google killed it. They did really, really well. They did way better than expected. 189 versus 151. Revenue of 80.5 versus 78. So way better than expected margin specifically. Here, we're going to put this up on screen as well. We're trying to cover all this, but... So here's Google and Microsoft. Way better than expected. Way better than expected. And again, tech is flying right now. Absolutely flying. I'm sure it's going to positively impact everything else like Meta. Yeah, Meta's up a lot from this too. Wow, Google just broke 175s. Nvidia's up to 840s right now as well. Snapchat. Let me wait for Snap. Snapchat's up. I don't know if it's out yet. Snapchat was scheduled to release theirs at 4:10, and so we still got like 6 minutes for Snapchat before they're really going to drop. But yeah, they did really well. Again, we're going to look at the rest of these numbers here for all of this. So again, 70 billion buyback for Google as well. So look at this. So $70 billion buyback for Google here. They authorized 70 billion Class A and Class C. That's what I try to tell people. Like, stop telling people the market's going to crash every other day. I know you might want it to happen, but you're leading people in the wrong way, man. Again, Google Cloud One revenue at 9.57 billion versus the 9.38 billion consensus, so higher than expected there as well. We're putting all these metrics up in chat. Microsoft had a bunch of them too. Yeah, it's crashing upward. So again, Microsoft third quarter revenue came in at 61.9 bill. Intelligent cloud operating income came in at 12.51 billion. LinkedIn revenue was up 10%. Personal computing revenue at 15.6 billion. Product revenue at 17 billion. Windows OEM revenue up 11%. Productivity and business processes revenue at 9.6 billion. T-Mobile just released their numbers here as well. Snap doesn't drop theirs until 10 after. So we still got a little bit of time for Snap. Unless they release early. But there's T-Mobile's numbers in the chat here. All right, so look at Google just broke 176s here. Guys, 176s. Nvidia at 841s. Sheesh, bro. Again, crazy. All right, 4:30, we got the full earnings call live here. Teledoc, please. TDOC. Give me a second. We're trying to cover all these. I don't see Teledoc yet. I'll have to look. Again, if you haven't already, check out one of our sponsors. One of our sponsors is a company called Apex's Funded Account Program. What they do is, it's a great way to like learn how to day trade with less risk. Most day traders lose money. And so if you think you're going to be an outlier, you're probably wrong. Here's Teledoc's numbers right here in chat. And so what Apex does that helps traders is that it limits the risk trading. Most day traders lose. You know, like if you have enough money to put up yourself and you know how to day trade, that's one thing. But if you don't have that much money and you want to kind of roll it into something, again, what Apex does is they give you a demo and they test your skill. If you could pass the test, they fund you the same amount as the demo they give you, right? So they give you a demo. The base one's 25K demo. They have packages all the way up to 300K static packages, all that good stuff. And again, the base one is the one we're going to use. It's $30. So just remember, this is $30. For $30, they're going to give you a 25K demo account. They're going to give you these conditions that you have to follow. And if you can make $1,500 in profit without losing $1,500 in profit and following these rules, they fund you 25K with a 90% split. And you get to keep your first 25K in profit as well. And again, in the futures market, you can day trade short. It's very similar to day trading stocks. Buy market, sell market. The only real difference is the sizing, but there's no PDT rule. The patterns look a lot like blue chip stocks. You can day trade the S&P, the NASDAQ, basically the SPY and Q price action, gold, a lot of great stuff. And again, if you lose, you're only out $30 for the base one. The top one is a couple hundred. And so your risk is limited and you can get started for less. And if you're a good trader, you can roll it into something, 90% split once you're funded, tons of great resources. And they paid out millions of dollars. I think they paid out over $100 million to their traders. They funded thousands of traders. I think they paid out over $25 million last month. And so again, a great way to learn how to day trade. And to be fair, I think most day traders are going to lose here as well because most day traders lose. But they have options where there isn't unrealized trading drawdown. And so yeah, so the big thing about, like, there's options where there's a static account where where it doesn't follow you up. You know, so there's a bunch of different options. If you want to check it out, use promo code BT Beginner Trading. Although again, guys, they are a sponsor of mine. I'm biased. They pay me money. So, of course, I'm biased. And if you haven't already, again, check them out. Great way to help support the channel. Gilead just reported their numbers. They posted a loss of $1.32 per share. They expected $1.51. Revenue of $6.69 billion. They expected $6.34 billion. So, Gilead did better than expected. They lost less than expected. I don't really know what Gilead does as a company, to be honest. But, there's the link if you want to check them out. Didn't my funded futures like close down? Crime Candle, like, didn't they close down? Hey, nice, Sam. Congrats, bro. Snap is out. All right, Snapchat is out. And Snapchat is up big too, dude. Look, people wonder why I do not short blue chip companies, right? I do not short blue chip companies. I'm not really going to call Snap a blue chip company. I'm going to take half of my profit off of Snap too. So we're out of 50% of the position. People wonder why I don't short blue chip companies because the edge is so high on the freaking upside. The edge is so high on the upside. I don't even know what Snap numbers are, but it just gapped up a huge percentage here. Let's see what the numbers actually showed up as. All right, so Snap first quarter revenue increased 21% year over year to $1.195 billion. Daily active users increased 10% year over year to 422 million. Cash flow of $88 million for the first quarter. Free cash flow of $38 million. They said, quote, the value we provide our community and advertising partners has translated into improved financial performance, said Evan Spiegel, CEO. He said, quote, our large, growing, hard-to-reach community, brand-safe environment, and full-funnel advertising solutions has made us an increasingly important partner for businesses of all sizes. Again, revenue came in at $1.195 billion for Snapchat, better than expected, better than last year. Adjusted EBITDA was $46 million. So Snapchat did great as well. If you look at Snapchat on the right side here, up to almost $14 a share. Huge rip. Google has almost had no red candles. Almost no red candles. Hit 181. I'm looking for Snapchat's number and guidance here. I'll have to look. So daily active users for Snap. Here's their actual numbers in chat. As for whether they got it up, I'm not sure. I'll have to find the guidance numbers. Really nice though. Almost everything's up. Tech is up. Tesla. Okay, got you, Crime Candle. Yeah, I'm not sure. I know Apex has had the largest amount of payouts versus anybody, though. I'm pretty sure. Yeah, Intel's the only one that didn't do well, but that's all right. I'm in Intel as well, and I'm down on it, of course, but we're only down $50. So, like, you know, Intel's a pretty small range stock. So I don't know. I'll have to figure out whether I want to add to it or whether I just want to cut it and get out. Nvidia ripped all the way up to 840s. It's currently at 843s. All right, chat again. So we got the earnings call in about 15 minutes for Google. So in about 15 minutes, we got the earnings call. Really, it's about 16 minutes. So be ready here, chat. We are going to stream the full earnings call live right here. So these are both. So Snapchat posted a 3-cent profit per share. They finally showed profitability. They expected 5-cent loss. They showed revenue of 1.19 billion. They expected 1.12 billion. So here's Snapchat numbers in chat as well. Again, y'all subscribe here, guys. Again, we really only need 300 subs left to break 135K. Just 300 subs. We got 1,100 people here live. So that's all the major ones, but we got Google's earnings call starting in about 15 minutes, chat. Almost exactly 15 minutes. So stick around. We're going to cover that. Then we're going to stream Microsoft earnings. Again, Google posted revenue of 80.54. They expected 79. Advertising revenue came in at 61 billion. They expected 60 billion. YouTube ad revenue came in at 8.09 billion. They expected 7.73 billion. Services revenue came in at 70.4 billion. They expected 69.06 billion. Cloud revenue came in at 9.5 billion. They expected 9.4 billion. They expected 372. So they basically came in more profitable than expected in every major sector of their business. Advertising, ads revenue, services revenue, cloud revenue, other bets revenue, all better than the estimates, than the analysts' estimates. So Google absolutely killed it with theirs. They did absolutely great for their earnings report. They did amazing, and justifiably so. They're gapping up to 177 right now. Microsoft all the way up to 420s. So good for Google. I'm in it. Yeah, Nvidia's earnings call is going to be freaking chaotic, bro. That's our largest earnings call we've ever done. We had 14,000 people watching the last Nvidia earnings call. It was absolutely ridiculous. It really was, dude. That was the craziest earnings call we've ever done. Yeah, next Tuesday, Amazon, AMD, and Supermicro Semiconductors. Hey, all good, Shy. No worries. Yahoo Finance probably thinks that because it was a larger number that it was better, but it was actually a larger loss than expected. But actually, that's wrong. It was a 9-cent loss versus expected 14-cent profit. So I don't know. They missed both for Intel specifically. Actually, no. Adjusted EPS was 18 cents. They expected 14 cents. They showed revenue of 12.7. So they actually beat on adjusted EPS, which is the more important one versus regular EPS. Adjusted EPS was 18 cents versus 14 cents. So Intel didn't do that bad for margin-wise, which is adjusted EPS. They did bad for revenue, though. So that's probably why they're dropping. So you can, from my understanding, Big Hoss, and again, I can't confirm this is for sure, right? But from my specific understanding of this, the way that works is you can trade your normal strategies during news, but you can't like take huge size, wait for a news release to drop, and then use that to try to hit your profit target on Apex, right? Like you can't manipulate news events to try to hit your profit target. It's basically what they're saying. But you want to confirm that with them because I really don't know. All right, so yeah, Google announced, from what I'm seeing, Google is announcing its first ever dividend, 20 cents a share. Actually, I don't know. I see I'm reading this somewhere else. I don't know if it's true. Yeah, so Google just announced its first ever dividend. So that is correct. It declared a 20-cent dividend for the first time in history and issued a 70 billion stock buyback. These wicks are not real candles. These are just random. Oh, these are kind of like glitches in the platform is what this is. It's not real orders. Google's earnings call is in about 9 minutes. So yeah, we got about 9 minutes until Google earnings. Bro, how much did the Lambo SUVs cost? Because they shouldn't cost that much because they're freaking ugly. You know? Like, listen, dude, if I'm going to get an SUV, I'm not going to get a freaking Lambo SUV. Like, those things are ugly, man. I'm sorry. Like, they're not, like, what's the point of getting a Lambo SUV? You get a Lambo for the curves. And this thing just does not have enough curves. They go for $300K. I'm good, man. I mean, I'm not buying a Lambo anyway, but still, just not pretty, you know. Microsoft earnings are at 5:30. All right, chat, we got 8 minutes. 8 minutes. John stocks are in the green, and I'm thinking about cars. No, I'm not that much in the green, bro. I wish I was, dude. I saw a picture of one, and it's ugly, man. I immediately said, hey, if you paid over 100K for that thing, you got ripped off. But then get a freaking G-Wagon, Q. Don't buy a Lambo. Again, it just doesn't look like a Lambo. It's not worth it. It doesn't turn heads. If I'm going to spend 300K on a freaking car, when I drive by, everybody better be staring at me, you know? If they're not, it's a waste of freaking money. And I get it. Some people are gonna say, "Hey, well, I'm not buying cars to be seen." I'm not really either. I'm not buying these cars anyway. But like, I'm not gonna spend 300K on a freaking hatchback, you know? And that's what it essentially is. It's a freaking hatchback. I'm not gonna spend 300K on a hatchback. You know. All right. So the SEC has recently accused MetaMask of acting like an unlicensed broker dealer. It was 70 billion, I'm pretty sure. Dexcom also put out, Intel forecasts more than 500 million of GAI chip sales this year, according to the CEO. So again, Intel's still projecting good things. I'm not sure why they're down this much, but hey. Well, all supercars suck to work on. 100% brother hatchback. Yeah, I mean, bro. You're going to tell me this doesn't look like a hatchback? This looks like a freaking Toyota Venza, all right? And you know it, all right? You're going to tell me this is not a hatchback car? Maybe I'm just a hater. Plausible, you know? If I were you guys, I might think I was a hater right now. And maybe I am. You're going to tell me this doesn't look like a Toyota Venza. All right? All right, Chad, we got 6 minutes. 6 minutes until earnings for Google drop. Let me switch my headphones out before I regret it. All right, Microsoft actually dipping down a pretty heavy amount. Wait, somebody's CEO is stepping down. Hold on. Atlassian Corporation CEO, co-CEO stepping down. I don't know this company, so it doesn't really matter to me that much. But all right, Chad, here we go. You guys ready? All right, Chad. Google. MetaMask. It's a crypto NFT platform. All questions asked should be met with magic word AI. Yeah, so Google, looking at your history, you know. What month do you think you'll hit your next milestone number? AI. All right, NVIDIA up to 843s. Let's see if it holds. Intel down a lot. Is it time to buy the dip? I'm not sure. Meta at 444.40s. Google at 177s. All right, Chad, here we go. It's time for Google's earnings call here, guys. All right, chat. 3 minutes. Can y'all hear the music? Actually, let me clarify this. Can y'all hear the music? You should be able to. All right, guys, it's freaking time. Okay, it's time. 2 minutes left. All right, chat, we're here. We're ready. You guys ready? All right. Yes, loud and clear. Good. Good. All right, so I'm going to mute the music, turn this music off. And let's get ready. All right, we're waiting here, team. We're waiting. We got the whole call ready. Google at 175s. I took a little bit of profit on my Google shares just because we're up so much. I had to. I don't find it depressing at all. Connor says it's kind of depressing that the strategy of buying large cap tech is so successful. No nuance. I don't find it. I'd rather it be as easy as I can, because if it's not easy, if a tech stock has bad earnings, if a tech stock has good earnings and goes down, everybody says the market's rigged. And so, you know, in the end, I'd rather it just be as easy as it can get. All right, chat, again, we're waiting for them to start. They haven't started yet. When they do start, just let me know if you can hear it. You should be able to hear it. We're going to put the Google shares up on screen. We'll put a 5-minute chart and leave a 1-minute chart up so you can kind of see both of them. Just kind of waiting. How many times will they say AI is another good question. Yeah, we're live. We're just waiting for them to start. I still have shares. Oh, we still have shares. All right, guys, y'all ready? Let's see if they start it. They got more whole calls. What's going on here? Okay, here they go.
Everyone, thank you for standing by for the Alphabet first quarter 2024 earnings conference call.
Sound check.
At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question-and-answer session. To ask a question during the session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Director of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's first quarter 2024 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Ruth Porat. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thank you, Jim, and hello, everyone. it was a great quarter led by strong performance from search, YouTube, and cloud. Today, I want to share how we are thinking about the business and the opportunity more broadly. Of course, that's heavily focused on AI and search. Then I'll take you through some highlights from the quarter in cloud, YouTube, and beyond. Let's discuss our momentum and strategy. Taking a step back, it took Google more than 15 years to reach $100 billion in annual revenue. In just the last 6 years, we've gone from $100 billion to more than $300 billion in annual revenue. Of course, search continues to power that, as you see in our Q1 results. But in addition, we expect YouTube overall and cloud to exit 2024 at a combined annual run rate of over $100 billion. This shows our track record of investing in and building successful new growing businesses. Now, let's look at how well we are positioned for the next wave of AI innovation and the opportunity ahead. There are 6 points to make. 1, research leadership. 2, infrastructure leadership. 3, innovation in search. 4, our global product footprint. 5, velocity in execution. 6, monetization paths. First, our foundation of research leadership. We've been an AI-first company since 2016, pioneering many of the modern breakthroughs that power AI progress for us and for the industry. Last week, we further consolidated teams that build AI models under Google DeepMind. This will help simplify development and establish a single access point for our product teams as they build generative AI applications with these models. The teams are making rapid progress developing Gemini and other models. In February, we rolled out Gemini 1.5 Pro, which shows dramatic performance enhancements across a number of dimensions. It includes a breakthrough in long context understanding, achieving the longest context window of any large-scale foundation model yet. Combining this with Gemini's native multimodal understanding across audio, video, text, code, and more, it's highly capable. We are already seeing developers and enterprise customers enthusiastically embrace Gemini 1.5 and use it for a wide range of things. Beyond Gemini, we have built other useful models, including our Gemma open models, as well as image and visual models and others. Second, infrastructure leadership. We have the best infrastructure for the AI era. Building world-leading infrastructure is in our DNA, starting in our earliest days when we had to design purpose-built hardware to power search. Our data centers are some of the most high-performing, secure, reliable, and efficient in the world. They've been purpose-built for training cutting-edge AI models and designed to achieve unprecedented improvements in efficiency. We have developed new AI models and algorithms that are more than 100 times more efficient than they were 18 months ago. Our custom TPUs, now in their 5th generation, are powering the next generation of ambitious AI projects. Gemini was trained on and is served using TPUs. We are committed to making the investments required to keep us at the leading edge in technical infrastructure. You can see that from the increases in our capital expenditures. This will fuel growth in cloud, help us push the frontiers of AI models, and enable innovation across our services, especially in search. AI innovations in search are the third and perhaps the most important point I want to make. We have been through technology shifts before, to the web, to mobile, and even to voice technology. Each shift expanded what people can do with search and led to new growth. We are seeing a similar shift happening now with generative AI. For nearly a year, we've been experimenting with SGE in search labs across a wide range of queries. And now we are starting to bring AI overviews to the main search results page. We are being measured in how we do this, focusing on areas where GenAI can improve the search experience while also prioritizing traffic to websites and merchants. We have already served billions of queries with our generative AI features. It's enabling people to access new information, to ask questions in new ways, and to ask more complex questions. Most notably, based on our testing, we are encouraged that we are seeing an increase in search usage among people who use the new AI overviews, as well as increased user satisfaction with the results. And with Circle to Search, people can now circle what they see on their Android screens, ask a question about an image or object in a video and get an AI overview with Lens. Fourth, our global product footprint beyond search. We have 6 products with more than 2 billion monthly users, including 3 billion Android devices. 15 products have 500 million users, and we operate across 100+ countries. This gives us a lot of opportunities to bring helpful Gen AI features and multimodal capabilities to people everywhere and improve their experiences. We have brought many new AI features to Pixel, Photos, Chrome, Messages, and more. We are also pleased with the progress we are seeing with Gemini and Gemini Advanced through the Gemini app on Android and the Google app on iOS. Fifth, improved velocity and execution. We've been really focused on simplifying our structures to help us move faster. In addition to bringing together our model building teams under Google DeepMind, we recently unified our ML infrastructure and ML developer teams to enable faster decisions, smarter compute allocation, and a better customer experience. Earlier this year, we brought our search teams together under one leader. And last week, we took another step, bringing together our platforms and devices teams. The new combined team will focus on delivering high-quality products and experiences, bolstering the Android and Chrome ecosystems, and bringing our best innovations to partners faster. We also remain focused on long-term efforts to durably re-engineer our cost base. You can see the impact of this work reflected in our operating margin improvement. We continue to manage our headcount growth and align teams with our highest priority areas. This speeds up decision-making, reduces layers, and enables us to invest in the right areas. Beyond our teams, we are very focused on our cost structures, procurement, and efficiency. And a number of technical breakthroughs are enhancing machine speed and efficiency, including the new family of Gemini models and a new generation of TPUs. For example, since introducing SGE about a year ago, machine costs associated with SGE responses have decreased 80% from when first introduced in labs, driven by hardware, engineering, and technical breakthroughs. We remain committed to all of this work. Finally, our monetization path. We have clear paths to AI monetization through ads and cloud, as well as subscriptions. Philip will talk more about new AI features that are helping advertisers, including bringing Gemini models into Performance Max. Our cloud business continues to grow as we bring the best of Google AI to enterprise customers and organizations around the world. And Google One now has crossed 100 million paid subscribers, and in Q1, we introduced a new AI premium plan with Gemini Advanced. Okay, those are the 6 points. So now let me turn to quarterly highlights from cloud and YouTube in a bit more detail. In cloud, we have announced more than 1,000 new products and features over the past 8 months. At Google Cloud Next, more than 300 customers and partners spoke about their generative AI successes with Google Cloud, including global brands like Bayer, Cintas, Mercedes-Benz, Walmart, and many more. Our differentiation in cloud begins with our AI hypercomputer, which provides efficient and cost-effective infrastructure to train and serve models. Today, more than 60% of funded Gen AI startups and nearly 90% of Gen AI unicorns are Google Cloud customers. And customers like PayPal and Kakao Brain are choosing our infrastructure. We offer an industry-leading portfolio of NVIDIA GPUs along with our TPUs. This includes TPU v5p, which is now generally available, and NVIDIA's latest generation of Blackwell GPUs. We also announced Axion, our new Google design and ARM-based CPU. In benchmark testing, it has performed up to 50% better than comparable x86-based systems. On top of our infrastructure, we offer more than 130 models, including our own models, open source models, and third-party models. We made Gemini 1.5 Pro available to customers, as well as Imagen 2.0 at Cloud Next. And we shared that more than 1 million developers are now using our generative AI across tools, including AI Studio and Vertex AI. we spoke about how customers like Bristol Myers Squibb and Etsy can quickly and easily build agents and connect them to their existing systems. For example, Discover Financial has begun deploying GenAI-driven tools to its nearly 10,000 call center agents to achieve faster resolution times for customers. Customers can also now ground their GenAI with Google Search and their own data from their enterprise databases and applications. In Workspace, we announced that organizations like Uber, Pepperdine University, and PennyMac are using Gemini in Google Workspace, our AI-powered agent that's built right into Gmail, Docs, Sheets, and more. We also announced Google Vids, a new application to create stories in short video format. And we introduced Gemini for meetings and messaging and Gemini Security for Workspace. Customers are choosing Workspace because they have deep trust in our powerful security and privacy features. Our cloud business is now widely seen as the leader in cybersecurity. I saw this firsthand when I went to the Munich Security Conference in February. Cybersecurity analysts are using Gemini to help spot threats, summarize intelligence, and take action against attacks, helping companies like American Family Insurance aggregate and analyze security data in seconds instead of days. Turning next to YouTube, which continues to grow and lead in streaming. We announced that on average, viewers are watching over 1 billion hours of YouTube content on TVs daily. AI experiments like Dream Screen will give anyone the ability to make AI-generated backgrounds for YouTube Shorts. And on subscriptions, which are increasingly important for YouTube, we announced that in Q1, YouTube surpassed 100 million music and premium subscribers globally, including trialers. And YouTube TV now has more than 8 million paid subscribers. Finally, in other bets, Waymo's fully autonomous service continues to grow ridership in San Francisco and Phoenix with high customer satisfaction, and we started offering paid rides in Los Angeles and testing rider-only trips in Austin. Overall, it was a great quarter, and there's more to come. I/O is in less than 3 weeks, followed by Brandcast and Google Marketing Live. I want to thank our employees around the world who are at the heart of this progress and who continue to focus on building innovative products, helpful services, and new opportunities for businesses and partners around the world. Thank you. Philip.
Thanks, Sundar, and hi, everyone. Google Services revenue of $70 billion were up 14% year-on-year. Search and other revenues grew 14% year-on-year, led again by solid growth in the retail vertical, with particular strength from APAC-based retailers, which began in the second quarter of 2023. YouTube ads revenues were up 21% year-on-year, driven by growth in both direct response and brand. Network revenues declined 1% year-on-year. In subscriptions, platforms, and devices, year-on-year revenues increased 18%, driven again by strong growth in YouTube subscriptions. Let's now talk about a few highlights from the quarter from a product innovation and advertising performance perspective. First, it bears repeating that AI innovation across our ads ecosystem is core to every aspect of our product portfolio, from targeting, bidding, creative, measurement, and across campaign types. We've talked about how solutions like smart bidding use AI to predict future ad conversions and their value in helping businesses stay agile and responsive to rapid shifts in demand. And how products like Broadmatch leverage LLMs to match ads to relevant searches and help advertisers respond to what millions of people are searching for. This is foundational. As advances accelerate in our underlying AI models, our ability to help businesses find users at speed and scale and drive ROI just keeps getting better. We're especially excited about the doors GenAI is opening for creative capabilities, helping deliver on the premise of getting the right ad to the right user in the right moment. Look at Performance Max. In February, we rolled Gemini into PMax. It's helping curate and generate text and image assets so businesses can meet PMax asset requirements instantly. This is available to all US advertisers and starting to roll out internationally in English, and early results are encouraging. Advertisers using PMax asset generation are 63% more likely to publish a campaign with good or excellent ad strength. And those who improve their PMax ad strength to excellent see 6% more conversions on average. We're also driving improved results for businesses opting into automatically created assets, which are supercharged with GenAI. Those adopting ACA see on average 5% more conversions at a similar cost per conversion in search and Performance Max campaigns. And then there's demand gen. Advertisers are loving its ability to engage new and existing customers and drive purchase consideration across our most immersive and visual touchpoints like YouTube, Shorts, Gmail, and Discover. Hollywood film and TV studio Lionsgate partnered with Horizon Media to test what campaign type would deliver the most ticketing page views for its The Hunger Games, Ballad of Songbirds, and Snakes film. Over a 3-week test, demand gen was significantly more efficient versus social benchmarks, with an 85% more efficient CPC and 96% more efficient cost per page view. Lionsgate has since rolled out demand gen for 2 new titles. We're also bringing new creative features to demand gen. Earlier this month, we announced new generative image tools to help advertisers create high-quality assets in a few steps with a few simple prompts. This will be a win for up-leveling visual storytelling and testing creative concepts more efficiently. And then there's obviously search generative experience, which Sundar talked about. I'll add that innovation in the user experience on search has historically opened up new opportunities for advertisers. We saw this when we successfully navigated from desktop to mobile. We're continuing to experiment with new ad formats, including search and shopping ads alongside search results in SGE. And we shared in March how folks are finding ads either above or below the SGE results helpful. We're excited to have a solid baseline to keep innovating on and confident in the role SGE, including ads, will play in delighting users and expanding opportunities to meet user needs. Which brings me to search and our strong performance in the first quarter. In Q1, retail was again a top contributor. Our focus remains on driving profitability and growth for retailers, helping them optimize digital performance for both online and offline, as well as innovate across our shopping and merchant experiences. Highlights include continued upsides for retailers, leading into agile budget and bidding strategies across search, PMax, or both. Take-home goods retailer IKEA, who leaned into Google's store sales measurement to understand its total omnichannel revenue opportunity across search. By measuring 2.3 times more revenue and using value-based bidding solutions to bid to its omnichannel customers, IKEA drove a significant increase in omni revenue in Q1 and is now scaling this strategy globally. We also expanded local inventory ads into 23 countries, helping drive shopper confidence and offline sales. Retailers can convert intent into action by showcasing in-store availability, pricing, pickup options, and more, all in one ad format. Moving to YouTube. Last quarter, I went deep into our strategy. It all starts with creation, which drives viewership, which leads to monetization. A few updates to build on Sundar's remarks. First, creation, which is all about giving creators the tools to create amazing content, grow their audiences, and build their businesses. In 2023, more people created content on YouTube than ever before, and the number of channels uploading shorts year on year grew 50%. We also hit a new milestone with 3 million plus channels in our YouTube partner program. We recently shared that YPP has paid out more than any other creator monetization platform, including over $70 billion to creators, artists, and media companies over the last 3 years. From a viewer's perspective, watch time across YouTube continues to grow, with strength in both Shorts and CTV. According to Nielsen, YouTube has been the leader in US streaming watch time for the last 12 plus months. In the first quarter, Living Room benefited from a combination of strong watch time growth, innovation in the user and advertiser experience, and a shift in brand advertising budgets from linear TV to YouTube. Viewers are watching YouTube because they expect to access everything in one place, across screens and formats, their favorite creators, live sports, breaking news, educational content, movies, music, and more. And advertisers continue to lean in to find audiences they can't find elsewhere. Which brings me to monetization. We're pleased with our Q1 performance across both our ad-supported and subscription offerings. Sundar covered subscription growth. On the ads front, direct and brand were both strong this quarter. Shorts monetization continued to improve, with Shorts ads now supported on mobile, tablet, living room, and desktop, and available to both performance and brand advertisers. In the US, the monetization rate of Shorts relative to in-stream viewing has more than doubled in the past 12 months, including a 10-point sequential improvement in the first quarter alone. Just last week, we introduced new ways for brands to get the most out of their Shorts ads with new lineups on YouTube Select, including sports, beauty, fashion and lifestyle, and entertainment. For YouTube advertisers, increasing brand lift is one of the core goals. In Q1, we saw strong traction from the introduction of a pause ads pilot on connected TVs, a new non-interruptive ad format that appears when users pause their organic content. Initial results show that pause ads are driving strong brand lift results and are commanding premium pricing from advertisers. Before I wrap, 2 quick highlights on how we're helping our partners transform and accelerate impact with the best across Google. Number 1, to help McDonald's build the restaurant of the future, we're deepening our partnership across cloud and ads. Part of this includes them connecting Google Cloud's latest hardware and data technologies across restaurants globally and starting to apply GenAI to enhance its customer and employee experiences. Number 2, WPP. At Google Cloud Next, we announced a new collaboration that will redefine marketing through the integration of our Gemini models with WPP Open. WPP's AI-powered marketing operating system already used by more than 35,000 of its people and adopted by key clients including the Coca-Cola Company, L'Oreal, and Nestle. We're just getting started here and excited about the innovation this partnership will unlock. With that, a huge thank you to our customers and partners, many of whom we're excited to see at Google Marketing Live and Brandcast in just a few weeks. And a huge thank you, as always, to our incredible teams for their agility and hard work this quarter. Ruth, you're up.
Thank you, Philip. We are very pleased with our financial results for the first quarter, driven in particular by strength in search and cloud, as well as the ongoing efforts to durably re-engineer our cost base. My comments will be on year-over-year comparisons for the first quarter unless I state otherwise. I will start with results at the Alphabet level, followed by segment results, and conclude with our outlook. For the first quarter, our consolidated revenues were $80.5 billion, up 15% or up 16% in constant currency. Search remained the largest contributor to revenue growth. In terms of total expenses, the year-on-year comparisons reflect the impact of the restructuring charges we took in the first quarter of 2023 of $2.6 billion, as well as the $716 million in employee severance and related charges in the first quarter of 2024. As you can see in our earnings release, these charges were allocated across the expense lines in other cost of revenues and OPEX based on associated headcount. To help with year-on-year comparisons, we included a table in our earnings release to adjust other cost of revenues, operating expenses, operating income, and operating margin to exclude the impact of severance and related office space charges in the first quarter of 2023 versus 2024. In terms of expenses, total cost of revenues was $33.7 billion, up 10%. Other cost of revenues was $20.8 billion, up 10% on a reported basis, with the increase driven primarily by content acquisition costs associated with YouTube, given the very strong revenue growth in both subscription offerings and ad-supported content. On an adjusted basis, other cost of revenues were up 13% year-on-year. Operating expenses were $21.4 billion, down 2% on a reported basis, primarily reflecting expense decreases in sales and marketing and G&A, offset by an increase in R&D. The largest single factor in the year-on-year decline in G&A expenses was lower charges related to legal matters. On an adjusted basis, operating expenses were up 5%, reflecting first in R&D an increase in compensation expense, primarily for Google DeepMind and Cloud, and second, in sales and marketing, a slight increase year-on-year, reflecting increases in compensation expense, primarily for Cloud sales. Operating income was $25.5 billion, up 46% on a reported basis, and our operating margin was 32%. On an adjusted basis, operating income was up 31%, and our operating margin was 33%. Net income was $23.7 billion, and EPS was $1.89. We delivered free cash flow of $16.8 billion in the first quarter and $69.1 billion for the trailing 12 months. We ended the quarter with $108 billion in cash and marketable securities. Turning to segment results. Within Google Services, revenues were $70.4 billion, up 14%. Google Search and other advertising revenues of $46.2 billion in the quarter were up 14%, led again by growth in retail. YouTube advertising revenues of $8.1 billion were up 21%, driven by both direct response and brand advertising. Network advertising revenues of $7.4 billion were down 1%. Subscriptions, platforms, and devices revenues were $8.7 billion, up 18%, primarily reflecting growth in YouTube subscription revenues. TAC was $12.9 billion, up 10%. Google Services operating income was $27.9 billion, up 28%, and the operating margin was 40%. Turning to the Google Cloud segment, revenues were $9.6 billion for the quarter, up 28%, reflecting significant growth in GCP with an increasing contribution from AI and strong Google Workspace growth, primarily driven by increases in average revenue per seat. Google Cloud delivered operating income of $900 million and an operating margin of 9%. As to our other bets for the first quarter, revenues were $495 million, benefiting from a milestone payment in one of the other bets. The operating loss was $1 billion. Turning to our outlook for the business, with respect to Google Services, first within advertising, we are very pleased with the momentum of our ads businesses. Search had broad-based strength across verticals. In YouTube, we had acceleration in revenue growth driven by brand and direct response. Looking ahead, 2 points to call out. First, results in our advertising business in Q1 continued to reflect strength in spend from APAC-based retailers, a trend that began in the second quarter of 2023 and continued through Q1, which means we will begin lapping that impact in the second quarter. Second, the YouTube acceleration in revenue growth in Q1 reflects, in part, lapping the negative year-on-year growth we experienced in the first quarter of 2023. Turning to subscriptions, platforms, and devices, we continue to deliver significant growth in our subscriptions business, which drives the majority of revenue growth in this line. The sequential quarterly decline in year-on-year revenue growth for the line in Q1 versus Q4 reflects in part the fact that we had only 1 week of Sunday ticket subscription revenue in Q1 versus 14 weeks in Q4. Looking forward, we will anniversary last year's price increase in YouTube TV starting in May. With regard to platforms, we are pleased with the performance in Play, driven by an increase in buyers. With respect to Google Cloud, performance in Q1 reflects strong demand for our GCP infrastructure and solutions, as well as the contribution from our workspace productivity tools. The growth we are seeing across cloud is underpinned by the benefit AI provides for our customers. We continue to invest aggressively while remaining focused on profitable growth. As we look ahead, 2 points that will affect sequential year-on-year revenue growth comparisons across Alphabet. First, Q1 results reflect the benefit of leap year, which contributed slightly more than 1 point to our revenue growth rate at the consolidated level in the first quarter. Second, at current spot rates, we expect a larger headwind from foreign exchange in Q2 versus Q1. Turning to margins, our efforts to durably re-engineer our cost base are reflected in a 400 basis point expansion of our Alphabet operating margin year-on-year, excluding the impact of restructuring and severance charges in both periods. You can also see the impact in the quarter-on-quarter decline in headcount in Q1, which reflects both actions we have taken over the past few months and a much slower pace of hiring. As we have discussed previously, we are continuing to invest in top engineering and technical talent, particularly in cloud, Google DeepMind, and technical infrastructure. Looking ahead, we remain focused on our efforts to moderate the pace of expense growth in order to create capacity for the increases in depreciation and expenses associated with the higher levels of investment in our technical infrastructure. We believe these efforts will enable us to deliver full year 2024 Alphabet operating margin expansion relative to 2023. With respect to CapEx, our reported CapEx in the first quarter was $12 billion, once again driven overwhelmingly by investment in our technical infrastructure, with the largest component for servers followed by data centers. The significant year-on-year growth in CapEx in recent quarters reflects our confidence in the opportunities offered by AI across our business. Looking ahead, we expect quarterly CapEx throughout the year to be roughly at or above the Q1 level, keeping in mind that the timing of cash payments can cause variability in quarterly reported CapEx. With regard to other bets, we similarly have work streams underway to enhance overall returns. Finally, as I trust you saw in the press release, we are very pleased to be adding a quarterly dividend of 20 cents per share to our capital return program, as well as a new $70 billion authorization in share repurchases. The core of our capital allocation framework remains the same, beginning with investing aggressively in our business, as you have heard us talk about today, given the extraordinary opportunities ahead. We view the introduction of the dividend as further strengthening our overall capital return program. Thank you. Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. And our first question comes from Brian Nowak with Morgan Stanley. Please go ahead.
Great. Thanks for taking my question. I have two. The first one, I wanted to ask about overall search behavior. Philip, I know you talked in the past about how overall query trends continue to grow. Can I ask you to drill a little bit more into monetizable and commercial query trends? Have there been any changes in sort of your commercial query trend growth? There's just been all these new entrants moving around in e-commerce is my first one. And the second one for Ruth, when you talked about sort of more efforts to moderate expense growth from here, can you just sort of give us some examples of areas where you still see the potential for more optimization or work streams in place to continue to durably re-engineer the OpEx space as we go throughout 2024? Thanks.
Thanks, Brian. To your first question, look, I think broadly, we've always found that over many years when things work well on the organic side, monetization follows. So typically, the trends we see carry over well. Overall, I think with generative AI in search, with our AI overviews, we are definitely, I think we will expand the type of queries we can serve our users. We can answer more complex questions well. And in general, that all seems to carry over across query categories. Obviously, it's still early, and we are going to be measured and put user experience at front, but we are positive about what this transition means.
And on the second question, in terms of the various work streams, as both Sundar and I said, we remain very focused on ongoing efforts to slow the pace of expense growth, what we've been calling durably re-engineering our cost base. And I made this point in opening comments, but we are very cognizant of the increasing headwind we have from higher depreciation and expenses associated with the higher CapEx. And so these efforts are ongoing, and they're very much the same that we've talked with you about previously. It starts with product and process prioritization, all of the work around organizational efficiency and structure. These are ongoing. And so as an example, the work that Sundar talked about, combining devices and services with our platforms and ecosystems, product area is a really good example, because unifying the teams not only helps us deliver higher quality products and experiences, but we think it enables us to move with greater velocity and efficiency. And then the other work streams we've talked to you about in the past, like all of the work around technical infrastructure, which Sundar alluded to, streamlining operations within the company through the use of AI, what we're doing with procurement with our suppliers and vendors, which he also referenced, the work you've seen on real estate optimization. These are all ongoing work streams, which is why we have them under the umbrella durably re-engineering our cost base, and they are ongoing.
Our next question comes from Doug Anmuth with J.P. Morgan. Your line is now open.
Thanks for taking the questions. Sundar, you talked about bringing more generative AI features into the main search page. Can you just talk about what kind of queries or scenarios you think that's working best for so far, and just how we should think about the cadence of continuing to adopt more of those features within core search? And then Ruth, on CapEx spending, the $12 billion in 1Q, can we assume that run rating that and above is reasonable for this year? And I know it's very early, but should we generally expect higher CapEx next year as well?
Thanks, Doug. On SGE in search, look, I think it tends to really, we are seeing early confirmation of our thesis that this will expand the universe of queries where we are able to really provide people with a mix of factual answers, a link to sources across the web, and bring a variety of perspectives, all in an innovative way. And we've been rolling out AI overviews in the US and UK, trying to mainly tackle queries which are more complex, where we think the SGE will clearly improve the experience. We've already served billions of queries, and it seems to cut across categories. But we are still continuing our testing, and we'll keep. We are metrics driven in these areas, and so we'll. But I'm optimistic that it clearly improves the user experience. Users are telling us that, and we are seeing it in our metrics, and we'll continue evolving it through the course of this year.
And then in terms of CapEx, as I said in opening comments, we do expect the quarterly CapEx throughout the year to be roughly at or above the $12 billion cash CapEx we had here in Q1. As I said, you can always have variability in the reported quarterly CapEx just due to the timing of cash payments, but roughly at or above this level. And it really goes to Sundar's comment, opening comment, that we're very committed to making the investments required to keep us at the leading edge in technical infrastructure to support the growth in cloud, all the innovation in search that he and Philip have spoken about, and our lead with Gemini. I will note that most, nearly all, I should say, of the CapEx was in our technical infrastructure. We expect that our investment in office facilities will be about less than 10% of the total CapEx in 2024, roughly flat with our CapEx in 2023, but is still there. And then with respect to 2025, as he said, it's premature to comment, so nothing to add on that.
Great. Thank you.
Our next question comes from Eric Sheridan with Goldman Sachs. Please go ahead.
Thanks so much. Maybe just one question of the big picture nature for Sundar. If we come back to your earlier comments at the beginning of the call and framing up longer-term initiatives and longer-term narratives, wanted to know if you could talk a little bit about both the opportunities and the challenges of operating at scale in a time like this where there's a lot of technology innovation going on, and how you see the elements of trying to strike a balance towards moving the organization forward while still, continuing to both invest for growth as well as balance margins. Thanks so much.
Thanks, Eric. Great question. Obviously, I think the AI transition, I think it's a once-in-a-generation kind of an opportunity. We've definitely, been gearing up for this for a long time. You can imagine we started building TPUs in 2016. So we've definitely been gearing up for a long time. The real opportunities we see is the scale of, research and innovation which we've built up and are going to continue to deliver. I think for the first time, we can work on AI in a horizontal way, and it impacts the entire breadth of the company, be it search, be it YouTube, be it cloud, be it Waymo, and so on. And we see rapid pace of innovation in that underlying. So it's a very leveraged way to do it, and I see that as a real opportunity ahead. In terms of the challenges, I think making sure. I think we are constantly. I think it's been a mindset shift which we've been driving across the company to make sure that we are embracing this opportunity, but being very efficient in how we are approaching it. Making sure we are redirecting our people to the highest priorities across the company, building on our 20 years of experience in driving machine efficiencies year on year, so that we can put our dollars to work as efficiently as possible. So making sure balancing all of that, moving forward in a very bold and responsible way at the same time, those are the important things to get right from my perspective.
Our next question comes from Stephen Ju with UBS. Your line is now open.
Right. Thank you so much. So, hi, Philip. I think it's approaching the 2-year anniversary for the launch of ads on YouTube Shorts, and I think you've given us an update on monetization pickup sequentially. But, with that in mind, I think, YouTube has launched an array of ad products and automation tools to help advertisers transfer what they're doing to the vertical screen. So, how is this translating into buy-in among your advertiser clients? And secondly, based on what you've seen over the last 2 years, are there any structural reasons that you can cite as to why the monetization cannot match what is already the case on the horizontal screen? Thanks.
Yeah, look, this is a great question. First of all, let's start with the fact that YouTube performance was very strong and this quarter. And on Shorts, specifically in the US, I mentioned how the monetization rate of Shorts relative to in-stream viewing has more than doubled in the last 12 months. I think that's what you were referring to. Yes, we're obviously very happy with this development. The way to think about it is advertisers really only spend with us when they see a positive ROI. So you can assume that this wouldn't be happening unless it were to work for advertisers in the short term and also in the long term. That's an important part, I think. Overall, Shorts is a long-term bet for the business. It has really helped us respond to both creator and viewer demand for short-form video. We talked about the strong growth, averaging 70 billion daily views. I mentioned the number of channels uploading has increased 50% year over year. So again, very happy with this development. And to your question, structural reasons, whether we can't get to a match here, I have a hard time seeing those at the moment over time.
Okay, thank you.
Our next question comes from Justin Post with Bank of America. Your line is now open.
Great, thank you. I'm going to ask another one about CapEx. It seems to be your biggest investment area. Just first, you saw the big uptick the last 2 quarters, but you've been investing in AI for years. Is the uptick because supply is getting easier to get, or do you see more opportunities with the available supply to really fuel AI? So it has the GPUs and everything gotten better that you feel more investing more? And then thinking about the returns both for advertising and cloud on the CapEx, do you feel like this is a higher cost of doing business, or do you think this is an opportunity to even get better returns on your capital spend than you've had in the past? Thank you.
So the increase in CapEx, as Sundar said and I said, really reflects the opportunity we continue to see across the company. It starts with all that we're doing in support of the foundation model, all the Gemini foundational model, but then also clearly the work across cloud on behalf of cloud customers and the growth that we're seeing with GCP and the infrastructure work there. And then, of course, as both Sundar and Philip talked about, the application across search, YouTube, and more broadly, the services that we're able to offer. So it's the growing application and our focus on ensuring that we have the compute capacity to deliver in support of the services and opportunities we see across Alphabet. And it really goes to the second part of your question, which is that as we're investing in CapEx and applying it across our various businesses, it opens up more service and products, which bring revenue opportunities. And we're very focused on the monetization opportunity. It does underlie everything that we're doing in Google Services and Google Cloud. And as Sundar noted, we're at the same time very focused on the efficiency of all elements of delivering that compute capacity from hardware, software, and beyond.
Our next question comes from Mark Mahaney with Evercore. Your line is now open.
Great, thank you. This is Jan Lee for Mark Mahaney. A couple questions. One, just maybe an expansion on the search query question from before. More like search volume, and maybe in the context of the off-Google environment, like AI chatbot, for example, we've seen kind of Meta AI directing to Google search results. Do you think there's actually a scenario where like AI system can create a step function change in search volume or use cases off Google. If you can give us more color on what are you seeing right now or what are you expecting to see in that area. And then the second question on just the comment of YouTube and cloud exiting at 100 billion run rate. What is informing this outlook of visibility for you? If you can talk about, is it driven by any sort of cloud demand inflection or step change in the GenAI workload demand? If you can flesh it out a little bit, thanks a lot.
On your first question, look, I said this before, but to be clear, we view this moment as a positive moment for search. And I think it allows us to evolve our product in a profound way. And search is a unique experience. People come and they get to, be it if you want answers, if you want to explore more, if you want to get perspectives from across the web, and to be able to do it across the breadth and depth of everything they are looking for. And the innovation you would need to keep that up. I think it's what we've been building on for a long time, and so I feel we are extraordinarily well set up, particularly given the innovation path we are on. And overall, I view this moment as a positive moment. So that's how I would say it. On the second part, Ruth.
I'm sorry. What was the
YouTube and cloud.
Yeah, like in terms of your comment about 100 billion exit rate for YouTube and cloud, what's driving this visibility for you, and any kind of inflection you're seeing in the cloud demand?
Oh, I would just say from Sundar's opening comments, it's just the ongoing momentum that we've seen in the business that we've been talking about, the ongoing growth, the strong performance. And so what we were really getting at in that comment, what Sundar was getting at, is that we've continued to build strong businesses over time, and that just helps dimension it. We had similar comments last quarter when you talk about our subscription business. We're really proud of all the work that teams are doing across the company, building new, strong opportunities, delivering for our users, for customers, for advertisers in profound ways. And so it was just helping to dimension what we have built over the years.
Our next question comes from Ken Gorelski with Wells Fargo. Your line is now open.
Thank you very much. Two, if I may. First, on GCP, you had nice acceleration in the quarter. Could you talk a little bit about the opportunities and constraints upon GCP's ability to continue to address that large addressable market and accelerate growth? Is it more sales oriented? Is it more product sales solutions, or both? And do you plan to address most of these organically, or could a partner approach work for you? And then the second one, just more detailed on YouTube and sports rights. Could you reiterate your view on further live sports rights? There's some larger, mostly in the U.S. league rights coming up soon, and will be more over the next several years. Could you just talk about your philosophy there beyond NFL Sunday Ticket? Thank you.
Thanks. Look, on the cloud side, obviously, it's definitely a point of inflection overall. I think the AI transformation is making everyone think about, their whole stack, and we are engaged in a number of conversations. I think, be it AI infrastructure, people really looking to Vertex AI, given our depth and breadth of model choice, or using Workspace to transform productivity in your workplace, etc. So I think the opportunities there are all related to that, both all the work we've built up and AI being a point of inflection in terms of driving conversations. I think you will see us do it both organically and with a strong partner program as well. So we'll do it with a combination. And the challenges here are always, and there are switching costs to cloud, and the challenges we see is how do we make it easier for people. There's a lot of interest, but there's definitely barriers in terms of people switching, and so that's an area where we are constantly investing to make it easier for our customers.
And with regard to your sports rights question, look, I mean, we've had longstanding and significant partnerships with the most popular sports league here in the US, around the globe, federations, teams, athletes, broadcasters. And obviously these partnerships in combination with our very vast audience of sports fans drives investment in subscription experiences across many offerings, NFL Sunday Ticket, YouTube TV, YouTube primetime channels, and so on. But there's nothing that we have to announce at the moment. We're obviously always looking at where we can create more value for our users, for our advertisers, for creators, but nothing specific to talk about at this moment.
Thank you.
Our next question comes from Ross Sandler with Barclays. Your line is now open.
Great. Sundar, I had a question about smartphone-based AI searches. So you guys are powering all these new AI interactions and searches on Pixel and on Samsung devices, and I think there's speculation that Gemini might be used on iOS in the future state. So the question is, if users start searching on smartphones and those searches are basically rendered on the model on the phone without accessing the web, how do you guys anticipate monetizing some of these smartphone-based behaviors that are kind of run on the edge? Any thoughts on that?
Look, I think if you look at what users are looking for, people are looking for information and an ability to connect with things outside. So I think there'll be a set of use cases which you'll be able to do on device. But for a lot of what people are looking to do, I think you will need the richness of the cloud, the web, and you have to deliver it to users. So I think again, to my earlier comments, I think through all these moments, you saw what we have done with Samsung, with Circle to Search. I think it gives a new way for people to access search conveniently wherever they are. And so I view this as a positive way to bring our services to users in a more seamless manner. So I think it's positive from that perspective. In terms of on-device versus cloud, there will be needs which can be done on device, and we should to help it from a privacy standpoint. But there are many, many things for which people will need to reach out to the cloud. And so I don't see that as being a big driver in the on-cloud versus off-cloud in any way.
And our last question comes from Colin Sebastian with Baird. Your line is now open.
Thanks, and good afternoon. I guess first, follow up on some of the questions on SGE and the core search. I guess I'm wondering, along with some of those changes in behavior, is there a way to quantify that overall engagement shift, whether that's an increase in time spent or increase in or the level of increase in queries for both sort of traditional search as well as more generative answers? And then secondly, on the hardware roadmap, I assume later this year we'll hear more about some of the products. But any areas of a particular focus or that you would point out that we should keep in mind in terms of hardware launches in the back half? Thank you.
Look, on the first question on search, not much more to add to what I said, but what we have seen, and remember we've been in live experiments just for a few weeks and in US and UK and on a slice of our queries where and all indications are positive that it improves user satisfaction. We see an increase in engagement, but I see this as something which will play out over time. But if you were to step back, this moment, there were a lot of questions last year, and we always felt confident and comfortable that we would be able to improve the user experience. People question whether these things would be costly to serve, and we are very, very confident we can manage the cost of how to serve these queries. People worried about latency. I think we are, when I look at the progress we have made in latency and efficiency, we feel comfortable. There are questions about monetization, and based on our testing so far, I am comfortable and confident that we'll be able to manage the monetization transition here well as well.
All right, guys, so that is going to be it for this earnings call. We are going to switch to our Microsoft earnings call. So our Microsoft earnings call is coming on right now. We're going to start it right now. You won't have to go anywhere. As soon as we close this stream, it's going to automatically bring you to the Microsoft earnings call. If for whatever reason it doesn't, here's the link. Again, check out our sponsors. Apex is one of our sponsors. Great way to help support the channel. They give you a demo, test your skill in futures. If you pass the test, they fund you. So if you ever wanted to day trade, but you don't have that much money, a funded account program is a great way to get started. They give you a demo. If you can pass a test on the demo, they fund you between 25 to 300,000 with a 90% split. So the reward's similar to putting the money up yourself, but the base one's only 30 bucks. So if you lose, you're out 30 bucks. They're a sponsor of mine. Great way to help support the channel. The futures market, you can day trade the S&P, NASDAQ currencies, some and some of them gold, silver. And I'll put this link up. You can check them out. Also, guys, we're going to end the stream right now and immediately, again, use promo code BT if you want to check out Apex. We're going to end the stream and immediately go to our Microsoft earnings call, which is going to start right now. So I'll see you guys over there. Again, don't go anywhere. It should automatically redirect you straight over there. So, yeah.